Despite a growing number of statements by European Union officials that a Russian oil embargo will definitely be introduced when Europe gets ready, there is still uncertainty in the energy market. After all, EU leaders are set to meet today to discuss details of a sixth sanctions package targeting Moscow, which they cannot accept for a while, months now. The focus is still on a possible ban on Russian energy supplies. Until this issue is addressed, the market will remain tense, at least in the near future, while energy prices will stay at elevated levels. Thus, everything depends on the European Commission's decision. If the issue is deferred for several months, oil prices will inevitably go down. And now let's take a close look at the trading chart. On a Friday, Brent crude oil futures consolidated above the level of $115 per barrel on the daily chart for the first time in 8 weeks. As a result, the quote broke through the upper boundary of the sideways channel and approached the $120 mark. The benchmark is clearly trading upwards, but the situation may change dramatically. Local overbought conditions may force traders to lock in profits, which will lead to a technical pullback. Uncertainty of a ban on Russian energy imports contributes to greater stability in gold prices. The yellow metal has been confidently trading in the range of $1,850 to $1,860 per troy ounce for several days now. Its further dynamics also depend on the European Union's decision. As is the case with the oil market, if this issue is deferred, tensions will subside. Thus, safe haven assets, including gold, will come under pressure. And this is the most likely scenario. In such a case, gold prices are expected to hit for the level of $1,800 per troy ounce. The 1,860 and 1,870 resistance area is still hindering buying activity. The risk of a price rebound will remain until the quote settles above the 1,870 mark on the 4-hour chart. Meanwhile, the Russian currency has been moving in a fairly wide range of 64 to 68 rubles per dollar since Friday. Indeed, high volatility has been a common thing for the ruble lately, given that the main reasons for its declines were the actions of a Russian central bank rather than fears of a possible embargo. It can be concluded that today's talks of the European Union officials on the sixth package of sanctions will hardly affect the ruble. Nevertheless, if Brussels does not impose an embargo, it will declare the inevitability of such a scenario in the future, and as a result, the energy market may plunge into complete chaos and face real shortages of both oil and gas supplies. And in this case, major importers will seek to sufficiently refill storage facilities in advance, including by ramping up purchases from Russia. This, in turn, will support the Russian currency. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.